If you're new to Bitcoin trading, congratulations. Likely you are the exit liquidity, but stick around because in the next couple of minutes, we're going to nuke the 5 dumbest mistakes rookie investors and traders alike make so you don't get wrecked like the rest of them. This isn't another influencer fluff piece. This is the entry level alpha, if you will, brutal and unfiltered. Learn these or keep donating your bags to the professionals, your choice. The first mistake is having no strategy or no system whatsoever. If your trading strategy is just vibes and candles, you're already cooked, unfortunately. Too many new traders just buy because a line got squiggly or they drew some kind of triangle that they think will make the price go up or down. They don't have a system. They just have hopium. I don't care if you're trading Bitcoin, the S&P, or pork belly futures. You need a framework of some sort, entry criteria, exit rules, position sizing. In my case, my advice for a total beginner, if they have absolutely zero system, is through 2 different lenses. So I'll start with the investor lens first, and then we'll go into the trading lens. Investor lens, if I had to suggest one simple way to get a system started to invest in the full Bitcoin cycle, it would be to start by looking at Colin Talks Crypto Bitcoin chart, which is the Bitcoin Bull Run Index. You can see it here on the screen. This is a composite of all of these inputs above, which are all great in their own ways. And you can see right away at a glance, if your strategy or system just revolved around buying Bitcoin when the line here is dark green or green, and then selling when it's orange or deep red, you would be ahead of 90% of people out there. Obviously, this is a very long-term chart. This is trying to capture the full cycle, but this would be a good start. If you wanted to make this a little bit more advanced, you can start looking into these individual on-chain metrics, open up a Google spreadsheet, and start building a system that way. For traders, folks who are looking to do something a little bit more short term, it's even more important to have a system. So I'm going to pull up the chart here. This is ETH, and an example of the most brutally simplistic trading system you can have. And everyone started with something like this. Is you can see the 2 lines on the chart that crisscross every now and then. These are EMAs, so exponential moving averages. Your system can be something as simple as buy when the fast EMA crosses the slow EMA. So for example, right here in April 2020, if you bought here and then waited until they actually crossed back negative, you would have made a ton of money. Same thing for the short side. If you're interested in shorting, when these lines cross to the downside and the lines go red, you sell and then you buy back in when the lines go green again. This is the most simple way, sort of 80 IQ way of looking at this and creating a trading system, but it'll give you something that'll allow you to build upon it, gain experience, think about position sizing, think about exits, entries, all of the important stuff. You have to start somewhere. So start with something simple, and that would be my suggestion. If you don't have any signal, you don't have any entry criteria, that's not how you trade and invest. You need to have rules, not feelings. Okay, let's move on to number 2, which is something I kind of skipped over in the first rule, which is having no risk management is a path to very quick portfolio losses and eventually complete failure, going to zero, basically. Most traders don't fail because their thesis is wrong. They fail because they YOLO'd 100% and forgot to use a stop loss. Risk management isn't optional in this game. It's survival. Stop losses aren't weakness. They don't make you less of a trader or investor. It's actually the opposite. They are discipline, and they show that a person does have a system behind what they're doing. If you don't set them, the market will do it for you, and pretty violently. Set your max drawdown, respect it, never risk more than you're willing to lose. This applies to trading, but it also applies to long-term investing as well. For number 3, I want to talk about liquidation maps. This is especially important for those of you wanting to do more short-term trading. Liquidation maps are extremely important because it shows you where price is likely to gravitate towards in the short term, and will also give you a good idea, if you're a mean reversion trader, for example, of when to potentially enter your reverse trade. You can see the one I use here, which is the CoinGlass one. These are free. There's also a ton of ways to look at this. There's short-term liquidation, so 3-day, for example, and you can see immediately it's very simple to gauge where price might go next. So if Bitcoin keeps going up here, you could easily look at this and say, okay, $118,881 is likely a good next target if I'm long right now and want to set take profits, for example. If your thesis is that Bitcoin is going to continue going lower, then this yellow bar, which is 116,581, would be your target for your system. And again, this goes from 3-day to a week to 2 weeks to even 6 months. So there's a ton of different ways to look at this. And my suggestion would be to keep an eye on this for 2 weeks, for 2 months, and you'll start to notice patterns in terms of how price moves towards these liquidation zones, especially ones that are super bright, meaning a lot of people have opened up short positions here or long positions here, and how the market kind of attacks them. The market is not your friend. It is a killer whale. It eats everyone up and spits them out. That is its game. And the only way to stay ahead of it is to get as much knowledge about where we could potentially go and setting probabilistic outcomes for those theses. Next up is macro. So ignoring the macro is a one-way ticket to full portfolio liquidation. I hear this all the time. I see it on my X feed. Bro, this altcoin's gonna 100X. No, it probably won't. And it's not because the altcoin sucks or your thesis is bad. But if we're in a bear market, no altcoin is going to do good. Sure, you'll have really rare exceptions, but if the overall market is in a downtrend and in a sort of bear market, altcoins are going to bleed because even BTC is bleeding. For example, I look at the ISM, the business cycle, full cycle investing, on-chain metrics like CBBI to try and get an understanding of where we are in the cycle today. If the Fed is tightening, liquidity is drying up, most likely things are going to head further down. The macro context, the big picture does matter. Risk on environments for risk assets lifts all boats. Risk off turns everything into a slow bleed. Bitcoin and all other cryptos by junction breathe depending on where global liquidity is trending. If the tide is going out, your gem isn't going to moon. It's going to drown. Sorry for the really brutal metaphors, but it is the truth. A lot of people have been tracking the global liquidity M2, which I can show here. This is something I use to look at on a daily basis. The green line here is global M2, and the blue line here is Bitcoin. And you can clearly see going into the end of the year, this goes up till November. This is a lagged correlation. Global liquidity is much higher than current prices. So overall, my thesis currently is that we are risk on, right? Which means my slant for all my investing and trading should be bullish. If you're not looking at things from a macro lens, you're going to miss the forest for the trees. Okay, last one I'll talk about, and this is more geared towards folks generally completely new to the space. They get really biased on the actual value of a token, meaning the dollar value or whatever currency you're using. So a lot of people new to Bitcoin will come in, they'll look at CoinMarketCap and say, oh, I really want to get into the crypto space, but I can't afford Bitcoin. It's 118,000. Ethereum, that's still too much. Ooh, XRP, $3. Maybe this can go to $15 and I'll 5X. Or they'll look at something like Doge, 23 cents. Wow, if I bought a ton of Doge, that'll maybe go to $1 and I'll make a killing, a ton of money. You need to stop thinking like a retail degenerate and start thinking like capital. And you need to look at the market cap. You can see the market cap here in this column. The market cap isn't just a number, it's gravity for the prices. A 50 million market cap altcoin can 10x off fumes for sure. Bitcoin, not so much. Bitcoin is a 2.3 trillion market cap leader of the industry, the bigger the cap, the more liquidity it takes to move the actual price. Same goes for dumping. So you have to think about the potential reverse as well, which is why when selling starts, especially for low market cap coins, heavy bags fall the fastest. Respect the market cap math, understand what you're investing in on a at least basic mathematical level, and don't bet that it's all the same. Market cap just means the price times the actual supply of the token. That 1000x you've been dreaming on, check the math. All right, if you made it this far, congrats. You're already ahead of 90% of your sort of normal people out there. The rest are still chasing pumps, ignoring the macro landscape, and blaming random whales that don't exist. Don't be that person. Get a system, manage your risk, understand the game, and you'll be on your way to a successful investing or trading career. Something that I see all the time is that people jump into this, they get a dopamine hit, they think trading can make them millionaires overnight. But the brutal truth is that it takes time. It takes, honestly, years of practice, refining your system, seeing what works, seeing what doesn't. As time goes on, all the alpha you learn sort of decays. So you have to be on the lookout for new ways to interpret what's going to happen with the price. It's a never ending game. That's why there are billion-dollar hedge funds out there with the best mathematicians across the world making quant models. If you think you're going to beat them by just sitting back and drawing triangles on the chart, you've lost the plot. So start somewhere, build a system, build out a thesis. Hell, ask ChatGPT for help if you need getting started, and you'll be better off than 90% of people out there. So that's it for this video. I hope this helped you at least think about investing or trading, even if in a tiny different way. And if you don't already have a system, drop me a DM and I'll help you set at least something up, something bare bones, foundational that you can build off of. Thank you so much for watching. I really appreciate you sticking it out with me. And as always, I'll see you next time.